Hi, I'm Meg Epstein of CA South Development, and we're going to talk about how I got started in real estate development in California and then moved to Nashville and where I see the urban landscape going for cities in the Southeast.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owners Association, where real estate investors have found success since 1968. I'm your host, Brian Hamrick from Hamrick Investment Group. This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 511. Real estate investors are always chasing growth, but developers are the ones shaping it. Today, we're talking with Meg Epstein, founder and CEO of CA South, a Nashville-based firm with over $380 million in industrial, multifamily, and mixed-use projects. Meg is going to share what investors need to understand about development strategy, female entrepreneurship, and how to spot opportunity in fast-changing markets like Nashville. We're also going to discuss urban planning and the future of cities. Meg, welcome to the show.
Thank you for having me.
How did you get started as someone in real estate, a female entrepreneur, and a developer?
It was a kind of a roundabout way, but I went to UCLA in Los Angeles and I was going into finance, but I graduated in 2008, which was a horrible time to be going into finance. And so I instead went into construction, building homes behind campus, which were like $50 million homes. I went to go work for a contractor right out of college. So it was a very roundabout way to kind of, I didn't take any classes for it or anything, but I kind of learned on the job sites how to build. And then when I got, as I understood project management and schedules and finance a lot more and how projects get done with banks and that sort of thing, I started doing my own projects when I moved to Nashville about 8 years after that.
Let's focus on the California, UCLA. Where exactly were you building? Were you in the Brentwood, Santa Monica, or Westwood area?
Well, I worked for a general contractor, so they had projects all in the luxury areas, Beverly Hills, Malibu, Newport Beach. But the job sites I were on were in Beverly Hills and Bel Air.
When you say you learned how to build, what does that mean? Did you learn how to swing a hammer and drive a nail? Or did you learn how to run a crew and make sure that the development was on target?
Yeah, run a crew, but I had a lot of time on the job site I had a superintendent who, had been in the construction industry for 30 years. And we had, if you can imagine, on a, $60 million home, you probably have 80 different consultants. So that's like in at least 20 different sets of plans, appliance plans, HVAC plans, landscaping plans. You have a lot of different consultants. It's much more complicated than what I do now when I build a $100 million apartment building. And so I was not swinging a hammer, but I was walking the job site in a job site trailer every day, eating off a taco truck, just like the guys, asking them tons of questions every day, absorbing the plans. I knew nothing about, even like how architectural plans were laid out. And I learned all of that. And then, of course, the architects would come to the job site once a week and the owners and just kind of, understood how something really gets built.
So there tends to be a real lack of women on construction sites and in development in particular. You're just coming out of college. So not only are you female, which puts you in the minority, but you're also very young. And I'm sure in the beginning, very inexperienced. So what was that like for you as a woman to step onto into a construction crew situation onto a construction site?
I think the reason they hired me was because, well, one, I would run by the job sites and I loved architecture. And while I had I did more training in finance, I just sort of could see the writing on the wall that a lot of, all these people that went is like first year analysts to go work at like Charles Schwab got laid off those, in
Was
2000.
this like 2008?
It was literally spring of 2008 is when I graduated. So it was just a horrible time to go do a consulting 2-year job and like do what everyone else is doing. So I decided to pursue, architecture and homes because that's what I really liked. I spent senior year in Barcelona and got really interested in architecture, but I knew I didn't want to be an architect. And so I got a job by literally going to the job site, stopping by and talking to the project managers. And the reason why I got hired was because of my finance and like the problem with contractors or subcontractors is that they get so stuck in their ways that they don't want to change, they're really bad with paperwork and that sort of thing. So they kind of brought me on to be like running the budget and schedule and like doing a lot of the admin, more like a project admin. But while I was there, that probably took me 10 hours a week or 20 hours a week. So I'd spend the rest of the time just learning really and talking to engineers and talking to the team and, interacting with the whole team. And as far as being a girl, I mean, I don't think I've never, try not to have any sort of, I've never experienced any crazy discrimination or anything from being a woman on a job site. I think, you probably get a few more looks or something like of a surprise, but if anything, everyone was very respectful. And I think, I was asking a lot of questions. I was very interested. Obviously, I kind of, I'm not like, I think if you're intelligent and interested, then you kind of have that's what you get judged based on,
Talk about what you learned in California and that transition to Nashville and what you were able to take from your experience in California to Nashville when you moved there.
I learned a lot about working. I worked with some of, the best architects or the best design minds in the world, like Robert Stern Architects and just some of these like top Marmol Radsinger, like some of these classical interiors or architecture firms that really shape, high-end design and what you see in the magazines, which was really a great experience. But I also, handled projects that were so complicated that it made me love commercial real estate because you can choose one light switch cover and it's not some emotional decision. And on these projects, we probably, like I said, we had so many consultants and they were so intricate. Like if you can imagine needing to fly in a bee charmer from Australia to like build a beehive so there's fresh honey for the client because they, were English and that's what they want when they see their garden outside. You know what I mean? Like just the most obscure, bringing in the Lakers training team to design the gym and Disney to design the kids' rooms, painting murals and just like crazy requests that make me really appreciate commercial real estate. And also really, I mean, just, this is a real estate podcast, but I learned a lot about life and about, how miserable these people could be and like what kind of person I wanted to be.
These were clients of yours and you were working in California, you were working on like residential properties?
Yes,
that you were building for them?
residential properties that were in the $30 to $60 million range. So they were like commercial scale properties. I worked for a general contractor, but yeah, they were the clients.
Do elaborate a little bit on what you learned about life and about the people who can afford and come up with these kinds of ideas.
No, I mean, I don't want to get like too philosophical, but I mean, it's maybe a comment on Los Angeles in general. It's typically a very materialistic place. It's made me really appreciate living in Tennessee. And, there's wealthy people in Tennessee that volunteer and spend all their time doing philanthropy. And it's a much more understated environment. So I think it's probably just Los Angeles is its own subculture of America is just very materialistic, right? So there's that. But just very early on, seeing the intricate lives of these people and being in their homes and seeing their children and how separate they live or how miserable they are, or and it was just sort of like, it's always given me a higher purpose to be a woman entrepreneur and inspire other women entrepreneurs or have, the drive to want to help people or just do something more than make money, even though that's really important. But I think I just witness when you get to a certain point of it, if you're only goal is just to make money, I think it can make you really unsatisfied.
You had this really incredible background working with incredible architects in California, and design, it sounds like, was very important to everything. When you go to Nashville, then you're working on industrial buildings, commercial multifamily, and you can tell us what other types of properties. But how did that translate? Because it seems like design and that architectural excellence doesn't always take a front seat when it comes to commercial buildings.
For sure. And I think that's one thing that made my portfolio unique, or made my offering unique, and how I scaled more quickly, was that I did bring California design, architects into Nashville on the design side. My very first architect that I met in doing residential homes in California when I was 24 is still my main design architect that has pretty much dictated the ethos of my company. And it's a very California design, but I think what I've tried to do is offer better design. Obviously, modernism lends itself to being well designed and not necessarily being a lot more expensive. So I've made my mark, or I've tried to make my mark, really offering a middle market modern product that's well designed, but doesn't have to be the Four Seasons or something.
Explain what that means when it comes to, say, designing and building a multifamily property.
In Nashville, there were probably, I don't want to bag on other, but there was a lot of institutional developers and investors that came into Nashville very quickly. So a lot of the product just looks exactly the same siding, same subway tile, same grade cabinets from 15 years ago, shaker grade cabinets, it just looks like a box. It's very uninspiring. And they just milled that out by the building everywhere. And I really, I tried to, with the same materials, stick over podium type construction, same tile, but maybe it's straight set, or, you know what I mean? It's just done more well thought out. Just better designed, and trying to bring, a better price point or a better product to the price point. It just takes a lot more work, but it's by far worth it. And I think my returns have spoken for themselves. And when the market gets saturated like it is today, it's nice to have a differentiated product versus what everyone else's looks like,
I think you said 6 over 1 podium. Can you explain what that is and why it is that all of these apartment buildings all across the country look the same when they're being built? Because there's certain standards that have to be met, or codes. And that is from what I understand, that's the most accessible design that's affordable within those codes.
Right. So I stick over podium was wood framing over podium concrete, like a concrete garage, basically. So if you have an acre in the middle of an urban center, you have to park it. So you have to put one or 2 stories of garage, and then the code lets you go up to 5 stories of wood framing. When you go to concrete type construction or steel construction, you really have to be in a zoning of 10 stories and above to make that worth it, in my experience. It depends on where you're at. Obviously, if you're in Florida or somewhere else, it's different. But generally, for the urban areas, in Nashville, you're not going to be able to sell your product for $2,000 a foot like you can in a Miami or California. And so you end up with needing to do a wood type product, and it just lends itself to squares, and people want to make the most. They want to maximize the square footage. So they build it right up to the edge of the lot, and they just choose the same cheapest railing there is and try to get the most square footage, because they're doing it on a pro forma basis and underwriting it based saying, okay, I'm going to make $2.20 on a foot on this. So I'm not going to do any balconies, and people are just going to have a little window to look at. It's just how it ends up. It's the most economical, but I think you also shoot yourself in the foot because everything looks like that. And, not everybody like design does mean something to people, or their built environment, I hope, means something, at least to the people coming from coasts where it is a higher priority.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com.
If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB and Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com. Is it design then that differentiates your product from what you just described? And when you say design, like, give us examples of what exactly you mean. I mean, is it choosing the right colors, choosing the right tiles, or is there more to it?
No, I think my buildings don't look the same if you'd compare them side by side. We use different exterior materials. We use a lot of greenery. Yes, the cabinets are, more modern. It definitely just leans itself to a very clean, modern look. But comparatively, it's just not the same. And as I said, I bring in a different perspective. I'm not using one of the same handful of architects that are, in the local jurisdiction that kind of build everything and make it all look the same for the cheapest amount possible, which is a stereotype. Like, I would like to say there are some beautiful buildings in Nashville, but I've been there for 10 years and now they're starting to, come out because, in the reality, you have to be able to support it. They have to be able to make money. And if you spend on a bunch of curved glass, that's a high rise, you have to be able to sell that for enough. And the Nashville market just wasn't there at the time. But I don't think it means you have to be completely uninnovative. And so that's why I've done it with a stick over podium type product. It's one of the things. The other big thing that differentiates me is I've done institutional projects. I've had public REIT investors. But where I've done the best, or what I'm leaning into now, especially after a decade of doing this, is that I really lean into niche asset classes and kind of look where the puck is going. I'm not doing like investment grade multifamily anymore or shallow bay industrial because it's sort of like past. And where I think I've really differentiated is identifying opportunities and building out asset classes that aren't yet institutional. And that's where I've made much bigger returns. And so that's what I'm focused on now.
Talk about that. I mean, what asset classes are you gravitating toward right now? And why do you, obviously, if it's not the industrial, if it's not the multifamily, then you've already kind of moved on from what is in vogue right now. How did you identify those and what are they?
Everybody wants multifamily and industrial, but that's why they're so overbuilt, right? And I've made a lot of in the last cycle doing those, it's fine. But at some point, if you want to make like much bigger alpha, you have to kind of see where the puck is going. And so my focus has always been on urban infill mixed use projects, which do include multifamily and condos, as well as industrial. But within those subsets, I tweak my business model based on the market. The capital markets completely changed in 2022. So what would have been a great deal in 21 is, doesn't work today. And that's why you don't see as much development happening because of inflation and interest rates being so high, et cetera, the story that everyone knows. So where I'm leaning into, and I don't think these are the only two opportunities, but for my expertise, I build condos that you can short-term rent out. And so they're an investment grade, they're an investment condo for a real estate investor that wants to make cash flow, but also wants to have a residence somewhere. So it's a bit of a more like efficient second home or a money-making timeshare or an Airbnb, like depends on what the investor's perspective is, but it offers kind of like a new modern way to invest in real estate that I've done very well at. And I've just broke ground on my fifth one, and I'm going to scale that out because I've had a strong track record in that in many different types of economies. Like when the interest rates were rising, it still works. So I decided to really lean into that this next cycle. And then the opposite of that is I'm rolling out an outdoor storage platform, which is a lot more along the lines of my industrial experience, but more cash flowing and development light to sort of offset the ground up high yield condo projects that are a lot longer term and higher risk,
Explain the self-storage concept that you're working on. Well, how is it different from the traditional self-storage development?
There's not buildings. It's more like along the lines of industrial outdoor storage, just segmented. iOS, industrial outdoor storage, got very popular in the last couple of years, especially post-COVID, as logistics became such an issue. And there, is more and more brick and mortar retail dried up, and a lot more is being done via Amazon and shipping. And staging and building in these southeastern cities that are growing so much, there's just a lot more logistics infrastructure needed. And so that sort of sprang up as an asset class. And now you see like big institutions, the Goldmans and, JP Morgan and these type of groups going into it. But it took many years. And if you went into it 6 years ago, no one would know what you were talking about. And they wouldn't want to do smaller deals because they tend to be about $5 million a piece, which is really small for an institutional investor. So I've just sort of watched as that asset class has evolved and decided I just saw an opportunity in that space that, like I said, is development light, that I think can be a nice complement to my portfolio because I don't have as much cash flow without the multifamily and industrial.
Because it's just, there's no buildings. People are just storing stuff out in the open, or like give me an example, like what's being stored there.
Someone staging construction materials that get dropped off there and used, or equipment.
That's an interesting concept. I mean, I'm in self-storage myself, and we have like outdoor parking spaces for RVs and boats and things. Is it similar to that as well?
Yeah, but it's a more commercial use. Like your business would be or your customer would be a business, not necessarily a retail.
And then going back to the condos that you're building, is that similar to the build to rent model, or are there some differences to that?
No, build to rent is building homes or townhomes and renting them out on like a planned unit development basis. So like a big group, like a Carlisle or a big institution will go in and buy a neighborhood and then rent it out. This is, an investor has $200,000 they want to invest. They buy a $750,000 unit, and it's a 3-bedroom condo in downtown Nashville, and they can live in the unit, or when they're not in it, or they can rent it out full time on a nightly basis, basically like a hotel.
I do want to get to the question that I'm excited to ask you, and the topic. It's about urban planning and the future of cities. I know you've got a perspective on this, and especially being in Nashville, which is a growing city. You're seeing it firsthand. What is your perspective?
I think that we were headed a lot more towards urbanization. Like when I first moved to Nashville, I think there were a couple hundred residences downtown. Like people just didn't live in the city, and everybody commuted into a big, 80s high rise with fluorescent lighting to go work. I think that's sort of going away. What you're seeing is, but I do think urbanization, so people are moving into the cities still. I think that was stopped by COVID, and that kind of paused that whole phenomenon, but it is coming back now. And you see all these people going back to cities, and that it is a more efficient way to, at least for especially with people without families and that sort of thing, to live, because you can walk more, you're using public transportation or walking, and you're just taking advantage of an urban landscape that, is more focused on parks. And in Nashville, I've spent a lot of time developing the riverfront and activating the water, people spending more time outside, having pets and pet-friendly areas in an urban environment. And we've seen how offices from the pandemic has evolved so much as well, where Class A office space is actually very much in demand. And there's neighborhoods in Nashville that have brand new Heinz office spaces being delivered, even though office as a sub-market or as a sub-asset is completely distressed, because people want walkable, lower rise office that they can go to the coffee shop and they can go to lunch and they can, have a bunch of nice amenities to work from, but they're not, and they maybe work there 4 days a week or 3 days a week. Like, that's sort of the new lifestyle. Maybe they live in the neighborhood is kind of what I see in Nashville anyways, or I've watched how the neighborhoods have evolved. And those are the neighborhoods that have peaked in terms of rents and development.
So you're seeing office development still happening and still being utilized in Nashville?
Yeah, but it's not the same office development that it used to be, right? It's not a big tower with no open space and fluorescent lighting and just all glass. You know what I mean? It's more like mid-rise and walkable neighborhoods and Class A.
How would people find out more about you, get a hold of you, and where would you direct them to if they wanted to get in touch with you?
We have a link on my website for contact casouthdevelopment.com, and we also post regular updates on our LinkedIn page, and check those messages.
How are you utilizing AI in your business today?
Obviously, it's a hot topic. I've been trying to stay on top of what, how we can take advantage of it. We use it for investor reporting, mainly investor reporting, any sort of decks or things you still need a lot of human interaction, but we use it for drafts along the way. There's an AI tool on Google Workspace that we can do an initial review of any new deals. So I'll get a broker package of an OM from a broker, will send me a deal and a bunch of different papers and things. And you can just dump it in this workspace, and then a podcast spits out for you and gives you like a little synopsis of the deal. And it kind of saves like hours of digging through due diligence just to be like, does this pass our normal parameters for what we would dive into? So that's a way that shortens due diligence.
Did you just say a podcast, like an audio podcast comes out and says, hey, looks like a deal that might be interesting?
Yeah. Like it's somebody, like it sounds like me and you interacting about well, tell me about the fundamentals of this deal. And then it talks to you about, well, this is an urban infill deal that's been around for, the last couple of years, but it includes this level of zoning, you know what I mean? It just gives you a little podcast blurb. That's been helped with due diligence and on the building the pipeline side. And then lastly, I do believe my chief development officer uses it when we're looking at, like I mentioned, so we're building a product that includes short-term rentals or hotel zoning. And he could say, please go into this code of Charleston and tell me what I can do under this zone. Can I build this type of product under this zoning, and get a synopsis? I think it's going to continue, it's not in a place where it can like underwrite my projects yet. I think that'll be there in the next 6 months, but it always takes it's not super accurate. It always takes, a human to babysit it, but it's been good. And I wouldn't say it's fundamentally changed our profit margins yet or anything, but real estate's pretty slow moving. So
thanks for coming on the show today and talking about your experiences developing and getting started in California and some of the most expensive areas of Los Angeles, and the design ethic that you took from that and transferred to Nashville, the types of projects you're working on. It's been a really fun conversation, and I appreciate you having it with me today.
Thank you so much for having me.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's higinvestor.com. This episode was sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB & Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com.
You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.